Hello traders, Jason here with SwingHigh.com. It is Tuesday, December 8th, 2009. This is your halftime report. Well, today, this morning, we had two retail sales type numbers come out. Let's see if I can pull those up here. We had Redbook come out worse than expected, 1.2% when we expected, or prior was 3.8%. I guess there weren't any expectations there, but much worse than the last report. And the Goldman same-store sales, or store sales, however you want to say it, was much worse than last time, down 1.3% in the week-over-week change, which is definitely not good news, especially with the holiday season approaching. This is supposed to be a good time for retailers, but apparently it's not as good as it should be. So here we are in the markets. The major indexes are down today. Most stocks are lower today. Here we are on SPY, the S&P 500 tracking ETF, and you can see that this morning, way before the news actually, we started to sell off, and this resulted in a gap down. In fact, as soon as we opened, we crashed right through the support at 110 and put in a low here at 109.40. In fact, I'll mark that because that's a nice little tweezers type bottom, if you will. And then after that, we put in a higher swing low and then tested away this 110 mark as resistance. Had a weak breakout above it, and then now we're still coming back and fighting with that 110 mark and seeing what's going to happen there. On the daily time frame, this is still sort of holding up inside of our high base type formation, although this does look pretty weak right here. If we hold up above 110, that'll sort of salvage this this high base. It'll still be intact, but it'll be weaker nonetheless. So we'll have to watch this and see if we start a down leg here. If we do, that would be nice to actually see some sort of continuation in one direction or the other. We'll just have to wait and see for that. Keep in mind, so far volume today is more significant than yesterday. Yesterday's volume was pretty light, and we'll have to see where that volume finishes as well. So there you have it. The S&P is down 0.7% intraday. The Dow is down almost 0.8%. The Nasdaq up 0.08%. The Russells down 0.3%, and the financials down 0.6%. So the Russells, financials, and Nasdaq are all relatively strong to the S&P and the Dow. The Dow is in fact the worst index today. So that's an interesting note. Takes away from the bear case actually to see the leading indexes showing relative strength. Let's look at gold real quick. Not much going on there. Down 0.2%, and the dollar, up 0.3%. So some strength in the dollar. There's talk about the fact that we may have put in a low here at around 22.02 on the dollar. So this is the dollar index, by the way. So we'll see if that is the low. If it is, that'll be bearish for stocks, as dollar strength is correlated with stock weakness, if you will. The internals tick. The tick is actually surprisingly bullish today, which sort of makes sense because most of the day we've been fighting back up after crashing in the morning. The trend is very bearish today. Right now it's 1.79. Remember, 1 is neutral, anything above 1 is bearish, and above 1.5 is significantly bearish. Way more volume flowing into stocks on the decline than on the rise. The VIX, yesterday the VIX popped 4%, which was an ominous sign, and today the VIX is up 3.7%, so that gives support to the bear case there. Thanks for being a part of SwingHigh.com. Check back this afternoon for your post-market analysis.